So, but here with Bitcoin, you're talking about 70%. And the market capitalization should equal gold. And gold's at 13 trillion. Bitcoin just hit 1 trillion. So to get to gold, it's going to be 13x just to match gold. And I think that's a reasonable expectation.
Yeah.
And then it should outperform gold because it's better than gold. And gold's being demonetized by Bitcoin. So really the market cap of Bitcoin should be 20, 30 trillion. The total bond market's 200, 300 trillion. And Bitcoin is demonetizing the bond market. So that means it could be a 200x if it really attacks the bond market and demonetizes the bond market. The total sum of financial products on planet Earth is about 400 trillion. So if Bitcoin demonetizes the whole kettle of fish, you're talking about a 400x.
Yesterday, Bitcoin reached $50,000 for the first time in over 2 years. This surge was driven by anticipation of interest rate reductions later this year and the recent approval of exchange-traded funds that follow its price. This means Bitcoin has increased by 16.3% this year, and many experts believe that this is just the beginning of its growth. There's a lot more potential for Bitcoin to continue rising. In a recent episode of the Orange Pill podcast, Max Keiser, a well-known financial analyst and entrepreneur, discusses the potential growth of Bitcoin's market capitalization in comparison to gold and the total bond market. Bitcoin's market capitalization was able to reach $1 trillion, while gold's market cap stands at around $13 trillion. Keiser suggests that for Bitcoin to match gold's market capitalization, it would need to increase by 13 times its current value. However, he believes that Bitcoin's value could go far beyond this. The current bond market has a total valuation of approximately $200 to $300 trillion. According to Keiser, Bitcoin, with all its current success, could potentially disrupt the bond market, leading to a massive surge in its value. There's a possibility of Bitcoin reaching a market capitalization of $20 to $30 trillion. This means a 200x to 400x increase from its current value. Let's take a look at some clips of Max Keiser as he discusses Bitcoin's growth potential and its power as an asset class. While watching these clips, we hope you can give us your support. Please like the video, leave a comment, and subscribe to our channel as it helps us continue making videos and sharing interesting updates about cryptocurrency finance. We hope you enjoy the video.
You know the rule of 72? So if you want to figure out how long it takes to double your money, you take the rate that you're making money and that's growing and divide it into 72. So let's say if you're making 7.2% on your investment, it would take 10 years to double because 7.2 would go into 72, I believe 10 times. So you get 10 years, take 10 years. So if Bitcoin has a 70% compounding rate, that means you're doubling your money on average every year, right?
Nice.
Which is about right. I mean, it used to be higher. It used to be closer to 200% before the last downtrend, but I think now it's like around 70%. But this is not going to stop anytime soon. This compounding effect, and probably the greatest trader is really Stan Druckenmiller, who worked under Soros, right? Soros had the quantum fund, which was one of the best performing hedge funds ever. Then Stan Druckenmiller took it over. And I think it was for 20 years, he was averaging a 30% return. I think that might be the most successful Wall Street track record ever, I believe. But that's still 30% a year. And Bitcoin is still more than double that. So, but here with Bitcoin, you're talking about 70%. And the market capitalization should equal gold. And gold's at 13 trillion. Bitcoin just hit 1 trillion. So to get to gold, it's going to be 13x just to match gold. And I think that's a reasonable expectation.
Yeah.
And then it should outperform gold because it's better than gold. And gold's being demonetized by Bitcoin. So really the market cap of Bitcoin should be 20, 30 trillion. The total bond market's 200, 300 trillion. And Bitcoin is demonetizing the bond market. So that means it could be a 200x if it really attacks the bond market and demonetizes the bond market. The total sum of financial products on planet Earth is about 400 trillion. So if Bitcoin demonetizes the whole kettle of fish, you're talking about a 400x. I always looked at it as an asset class. Like I don't look at it at the technology so much, or I don't look at it the philosophically so much. I look at it as an asset class because that's my background. I'm a stockbroker. So when I first heard about it in 2011, the question was, is this an asset class? And what is it? Is it a stock? Is it a bond? Is it a currency? Is it a commodity? So you get to the point, well, it's a commodity. It's a synthetic, digital, absolutely scarce commodity is what it is. And so as an asset class, it comes closest to gold, but it's better than gold in many ways.
One of the reasons why Keiser is confident about Bitcoin's power and security is because it operates in a decentralized manner, meaning any single entity or authority does not control it. According to him, the SEC would prefer to stop Bitcoin if they could, but they can't because it operates in a decentralized manner, making it difficult to control or manipulate. While Keiser remains bullish towards Bitcoin, he criticizes individuals who invest in riskier cryptocurrencies, even stating that promoting such investments is illegal because they are often unregistered securities. Along this topic, Keiser mentions the efforts to stop these risky investments, especially in countries like El Salvador, where Bitcoin is now accepted as official money. Individuals may exploit government support to falsely promote certain cryptocurrencies, leading to financial losses for unsuspecting investors. Let's take a look at Max Keiser as he explains his opinion on the matter.
They don't get it. The SEC doesn't follow the law. They're not in there to adjudicate what's right and what's wrong. They're there to protect the cartel of Wall Street. And the cartel of Wall Street, they cannot stop Bitcoin. Gary Gensler has said as much. It's unstoppable. They would love to stop it if they could, but they can't because it's perfectly decentralized in a way that nobody can attack. Whereas Ripple is not. Ripple is highly attackable, right? And they're attacking it. And they will continue to attack it until it goes away because that's their agenda and that's their objective. And it's not going to work. And you see it in the price action. The price action is terrible. All these shitcoins go to zero against Bitcoin eventually. As you say, they get a pop. They get a nice, little pop, and everyone pretends like they made some money on that pop. They end up losing money on that pop. I mean, it's exactly the same mentality as Las Vegas of people who are addicted to gambling. These are gambleaholics, people who trade in shitcoinery. I started a thing called Shitcoiners Anonymous, where people can go to recover from their shitcoin addiction. They refuse to believe that these are unregistered securities, and it's illegal to promote unregistered securities. It's illegal to sell unregistered securities, but it's equally illegal to promote unregistered securities. You see, in the Canadian mining, Canadian miners, gold and silver miners, are notorious for starting companies based on two guys standing around a hole in the ground saying they just discovered 1 million ounces of silver, and then they go public and they cash out, and then they're gone and you never hear from them again. That goes on over and over and over again. So it's exactly the same thing with shitcoins. It's just like this is what we do at the Bitcoin office, is to stop big shitcoiners from coming into El Salvador, because what they do is they end up taking a photo with somebody in the government. So some shitcoiner stands with them and says, the government loves this shitcoin. And there's a guy smiling with a broom, that guy who's making all the noise. You could be just smiling and just like, ha 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 ha. And so they put that on the internet, and then suddenly something that's worth nothing, it's worth 0.0000001, is now worth 0.0001. The people dump it, cash out, and then they just go to the next. Same thing with ICOs. ICOs sold to in the pre-market of their ICOs for millions, $500 million, or like EOS. EOS was one that's pre-sold, excuse me, in the billions, and then they skipped town, and it was just a total fraud. And but there's a guy named Dan Larimer. Give you a little history of the shitcoin business. He's launched, I think, no less than 3. He's like the master of the shitcoinery, going back really 10, 11 years. Mm-hmm. He's one of the kings of shitcoinery. He's played it smart though, because no one really knows his name that much, but he's done several big time pump and dumps shitcoin. But anyway, so with El Salvador, because it's so famous now as Bitcoin country, people also engage in what's called orange washing. So you go to a site that'll say, we love Bitcoin, we're Bitcoiners. And then you go to their site, you start following them, and then it turns out it's an ad for shitcoin.
Where money is concerned, scams always follow. And the same is true with cryptocurrency. This is what Max Keiser is cautious about. He views most alternative coins as scams because he believes a lot of them are created solely to make a quick profit or capitalize on the initial hype around cryptocurrencies, which often dies down shortly after. They don't bring anything new or valuable to the table, and according to Keiser, many of them are merely imitating the qualities of Bitcoin. That is why he warns against promoting alternative coins, especially if they are not registered with regulatory authorities, as they may be considered illegal securities. Share your thoughts in the comments section below on whether you agree or disagree with Keiser's perspective on this matter. Fraud and scams continue to be significant issues that tarnish Bitcoin's reputation, leading to fear, uncertainty, and doubt. And since we're on this topic, we encourage everyone to always be careful when it comes to investments. For your reference, let's name a few common ways that people may scam you when it comes to crypto. In certain Bitcoin investment schemes, some scammers reach out to investors pretending to be experienced investment managers. In this scheme, these supposed managers boast about earning millions from cryptocurrency investments and assure their targets that they'll profit from their investments too if they listen to them and give them their money. Additionally, there are rug pull scams, which are more related to what Keiser cautions about, but are dirtier. In this scheme, scammers start hyping up a new project, NFT or coin, to get funding. Once they have the funds, they vanish. The coding for these investments prevents people from selling the cryptocurrency they purchased, so investors are left with a valueless investment. A well-known example of this scam was the Squid Coin scheme, named after the Netflix show Squid Game. Investors had to play games to earn cryptocurrency. They bought tokens for online games, hoping to exchange them for other cryptocurrencies later. The Squid token's value shot up from 1 cent to about $90 each. Then, trading halted, and the money vanished. The token's worth dropped to zero as people tried but failed to sell their tokens. The scammers made around $3 million from these investors. With that said, it's always important to do thorough research before investing in risky or volatile assets. Because of all the issues mentioned, some experts like Max Keiser even urge us to stop investing in altcoins altogether. But of course, this will always depend on you as the investor and what you think will help you the most in your financial journey. Bitcoin is just often considered better than altcoins for a few key reasons. First, Bitcoin has been around the longest and is the most well-known cryptocurrency, which means it's generally more stable and trusted. Second, Bitcoin has a larger network of users and merchants, making it easier to buy, sell, and use in transactions. Third, Bitcoin has a fixed supply, meaning there will only ever be 21 million Bitcoins, which can help protect against inflation. Finally, Bitcoin's decentralized nature means it's not controlled by any government or company, giving it greater independence and resilience against manipulation or interference. Do you agree with Max Keiser's insights? What are your thoughts on Bitcoin's potential and the risks associated with alternative cryptocurrencies? Let us know in the comments below. Thanks for watching. If you found this video informative, please give it a thumbs up and subscribe to our channel for more updates and discussions on cryptocurrency finance. Stay tuned for our next video, and until next time, happy investing.